President Tinubu suspends Minister of Humanitarian Affairs and Poverty Alleviation. Central Bank of Nigeria disburses $61.64 million to airlines. Oil slips as higher OPEC supply. Saudi Arabia price cuts offset Middle East worries. Asian markets inch higher as investors await Bank of Korea meeting inflation data this week. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Bakar, your guide. Now let's begin the program by telling you that President Bola Tinubu has suspended the Minister of Humanitarian Affairs and Poverty Alleviation, Dr. Beta Edu, from office immediately. This is in line with the present administration's commitment to uphold the highest standards of integrity, transparency and accountability in the management of the Commonwealth of Nigerians. A statement signed by Special Advisor to the President on Media and Publicity, Ajuri Ngilale, directs the Executive Chairman of the Economic and Financial Crimes Commission to conduct a thorough investigation into all aspects of the financial transactions involving the Federal Ministry of Humanitarian Affairs and Poverty Alleviation, as well as one or more agencies under the ministry. Furthermore, the President has tasked a panel headed by the Coordinator Minister of the Economy and Minister of Finance to, among other functions, conduct a comprehensive investigation on the financial architecture and framework of the social investment programs with a view to conclusively reforming the relevant institutions and programs in a determined bid to eliminate all institutional weaknesses. The suspended minister is hereby directed to hand over to the Permanent Secretary of the Federal Ministry of Humanitarian Affairs and Poverty Alleviation. Now, in a move intended to send the Naira soaring, the Central Bank of Nigeria has injected approximately $61.64 million into the hands of foreign airlines operating in the country. This targeted disbursement aimed at clearing a portion of the backlog of matured foreign exchange obligations owed to the airlines, marks a significant step towards stabilizing the country's forex market and boosting investor confidence. Acting Director, Corporate Communications Department of the Apex Bank, Hakama Sidi Ali, who confirmed this development, described it as a welcome relief to foreign airlines grappling with delayed forex access. These measures are expected to have a ripple effect by alleviating the current pressure on the Naira's exchange rate, as well as enable a considerable strengthening of the Naira against major world currencies as a result of the CBN's intervention. Economists in Uyo are advising Nigerians to adapt to the reality of the new normal on the cashless economy. This is coming as part of continuous reactions to the Central Bank of Nigeria's assurances to safekeeping of depositors' funds in commercial banks. Correspondent Joy Ubani, in an interaction with some citizens in Uyo, reports on some challenges they encounter during transactions at commercial banks, POS and ATM outlets.
The Central Bank of Nigeria, CBN, in its recent statement on safety of depositors' funds in commercial banks in Nigeria, has raised concerns from some Nigerians in Uyo.
I think that there's money in the bank that I can withdraw. Surprisingly, they said there is no money, so I don't know what is going on.
If you walk out of the bank to use the POS, story. So it's not working.
Some people say that there's no money in the bank. Oh, we sell money, so we buy money.
Economic watchers called on relevant authorities to revisit the issue of low cash circulation in commercial banks.
I don't know what the bank are doing, the CBN and the commercial bank, whether they are cajoling us or they are making a fun of Nigeria.
It's unimaginable suffering. People who will have their money, they will go to the bank to deposit money, but they can't have access to the money when they are in need of the money.
You go to get your money, the highest they can give you is 5,000 naira. The rest you say you go to ATM or POS. There's no money in the circulation at all.
An economist in the University of Uyo, Dr. Paul Orebi, advised Nigerians to accept the new normal in cash circulation.
There's nothing to worry about. From my perspective, CBN is doing their work, which is the statutory responsibility, of oversight over the monetary system. We need time, to get out of all of those problems. It won't happen in a jiffy.
However, the Apex Bank assures depositors of safety of their monies in commercial banks.
And now to our discussion segment. During the last inflation figure released by the National Bureau of Statistics, we saw it rise to 28.02%, indicating a return to an era of 2005. Also in December 2023, the Naira tumbled to an all-time low of 199 Naira against the dollar at the country's official foreign exchange window. Now to speak on the interrelated structure of the global economy, as well as what will really be the factors to help drive down inflation as we take a look at Nigeria's economic outlook and forecast for 2024. I have with me an economist, Yushe Waliu. You're welcome to Business Express.
Thank you. Good afternoon.
Now, to begin to assess and digest the economic outlook for 2024, I would like you to maybe give us your own take about this developing news that the president has just suspended the humanitarian minister. What do you make of this move? Does it mean a kind of different approach to how ministers handle public office or trust?
Mr. President on 1st of January has spoken to Nigerians, and he emphasized that he is aware of the predicament they are facing, and especially when you take the report of the MBS last year, where multidimensional poverty has been mentioning and is still putting pressure on any leadership in Nigeria to take care of the income grouping. Mr. President, however, lamented significantly that he is going to renew hope. The suspension will add value to his administration, looking at the fact that it was first in the social media, later government started responding, and at the end of the day, Mr. President has responded positively. It's a good sign for Mr. President that he is up and doing in trying to make sure that anybody that has been appointed using the scorecard, as he emphasized, will have to double their effort, and also to be more careful, and at the same time also to be more impactful to the welfare of Nigerians, especially the humanitarian aspect of the ministry.
Okay, people looking at this development, what do you think? What do you think is on their mind right now?
What is on their mind is that they are now believing that the renewed hope agenda of Mr. President is trying to, people will begin to now trust the leadership, and at the same time, not only trusting the leadership, all of us will be more careful in how we deal, especially in matters of public interest.
Okay, now let's look at the 2024 prospects. The governor of the Central Bank of Nigeria, Yemi Cardoso, when he appeared before the Joint Committee on Banking, Insurance and Other Financial Institutions last year, stated that the upward trends in inflation and exchange rates are expected to decline in 2024. How possible is this?
I have seen the possibility. You know, first thing is to admit that the system is working. Previously, the central bank officials are not responding to the desired need of the economy. But what we saw, even with the airline provisions of exchange rate of over 61 million US dollars, you can see the liquidity aspect of intervention by the bank. Not only that one, you can also recall that in background news line, you emphasize that the central bank is aware of people's deposit, and that is why even the bank is coming with recapitalization exercise whereby banks will be able to update their financial standard so as to provide an opportunity for Nigerians who are interested in boosting certain economic agenda, especially industrialization, can be met up. Remember, prior to this, 120 billion was a set capital of most of the bank in Nigeria. Nobody, no individual who is interested in investing in a refinery can access funds that is required for that heavy investment. But with the recapitalization, with the injections, and with also advanced policies, and even with the suspension of the MPR, you can see that MPR has not been adjusted to check money supply, but inflation is going high. But we are expecting, with the step taken by Mr. President in making sure that all the instruments available at the executive disposal are efficient, and also more of the appropriation, the budget 2024, which has been targeted as budget of renewed hope, is being implemented quickest. We have seen the budget being signed on 1st of January, and we are expecting relevant ministries and relevant authorities to be given their own quota to the growth of the economy. However, central banks still remain an important body to adjust macroeconomic aggregate policies that will make it more friendly to consumers, more friendly to investors, which at the end of the day we have better GDP performance.
Now over $61 million to settle the backlog. At the meantime, we have around $800 million to. That means you can see the gap. So how does this really impact the market on the long run?
It will be impacting in the market if the banks sustain the intervention, requiring the fact that previously you cannot allow such backlog to be into that level. It's a very serious disturbance to the operations of airline. It is also very dangerous disturbance to potential travelers, which at the end of the day you don't have stability in terms of fixed airfare. But presently, if this intervention is being harnessed and efficiently being conducted, in an average of 1 to 2 years, you can be able to settle that, and that will now settle part of the challenges that we are facing in terms of liquidity in our foreign exchange. Remember that the central bank has to also be double its effort, not only through that intervention, but also to look at other windows that will be more friendly to economy, that will be more friendly to investors, and at the same time to make sure that certain policy adjustments are considered based on the domestic need, based on the domestic challenge of the Nigerian economy.
Now, we've seen the growth, the GDP growth around more than 2%, and the president talked about achieving a $1 trillion economy. What areas do we need to really focus on to see that we achieve this $1 trillion economy?
First of all, in any economy, you have to look at the size of the population. I consider size of population to be very, very significant. If you check the size of GDP in Africa, Nigeria is leading with over 477 billion. Egypt is following Nigeria. But if you look at the population size of the Egyptian economy and population size of Nigerian economy, you realize that Nigeria has better potential. The only thing is to exploit the sectoral aspect of our economy. Probably we check agriculture. This agriculture remains significant, especially when you look at the food inflation that is facing the economy, and it is associated with that as a result of supply bottlenecks and production bottlenecks. This production bottlenecks has to do with the cost of input. If government will consider input in agriculture and also to sustain the production, and this is the first one. The second angle, which is more paramount to the economy, is to make sure that the entire economic environment is secured and adequate facilities are provided, adequate logistics are also provided. Let me attest to a simple scenario. When some of us who are regular travelers of Abuja, Kaduna, we have more confidence now to travel. So this type of confidence that has been developed over a few months ago, this is what is supposed to be developing in most of the agrarian communities, so that they can go back, so that input can get there. And at the same time also, one aspect that I think Mr. President has already addressed is the issue of power supply. Making an intervention with Siemens from Germany will assist power supply, not only for the manufacturing sector, but for the entire sectoral development, including the service sector that is providing much to the Nigerian economy.
Now, another area is the cost of borrowing. We've seen the monetary policy rate. The last time CBN sat, it was around, I think, 18.75%. So what would you like to see the Monetary Policy Committee do this year?
First of all, I am expecting the MPC under Kodoso to still maintain that particular level of 18.75%.
But inflation is not decelerating.
Yes, it's not celebrated, but what we are trying to, monetary policy that is required for the domestic economy don't require additional cost of borrowing. And this cost of borrowing is adjusting seriously in terms of inflation. You cannot expect a producer that is paying taxes, that is paying transport costs, that is paying higher prices for AGO. You cannot expect that the existing borrowing to go up with a certain percentage, and at the same time you expect price to remain as it is. The option here is, let us make the prices to be stable. And if prices are to be stable, we have to make sure that the MPR is stable, because part of the component that push monetary supply in this economy has different behavior. It's not the same with orthodox behavior that if things are going well. Remember that the exchange rate, speculators are there disturbing the exchange rate, and central bank also has to address the issue of speculators, meaning that the windows at which CBN is making provision for exchange rate has to be sustained on a regular basis, and not only on a regular basis, good monitoring and efficiency has to be also involved in making sure that we stabilize the exchange rate. By stabilizing the exchange rate, then we can now look at other components that normally checks our macroeconomic indices.
Now, portfolio investment, we've seen quite activities in the capital market, and which is quite remarkable. But the other part of investment, which is foreign direct investment, we're yet to see much from it. What should we do different, or what should the government do different to see that we attract the needed foreign direct investment?
Mr. President has started building confidence. You know, whatever investment that is coming into the economy, investors will look at the security of their investment, security of their lives, and also the conducive atmosphere of ease of doing business. Mr. President has to ensure that ease of doing business principle and ranking is changing by policies, is changing by intervention, and is changing by certain guarantee that will make investors to come, invest, take care of the investment, and at the same time also encourage domestic investment. There is no way you start looking for FDIs if domestic investment is not properly organized, coordinated, and encouraged.
Thank you very much. Economist Ishewu Aliu, thank you very much.
Thank you, and Happy New Year once again.
Now, let's now take a trip to the commodities market. Next is a summary on how stocks fared last week as put together by Olayin Kaojo.
And market capitalization appreciated by 6.54% to close last week at 79,664.66 basis points and 43.594 trillion naira. The market opened for 4 trading days last week as the federal government of Nigeria declared Monday, 1st January 2024 as public holiday to commemorate New Year celebration. A total turnover of 3.320 billion shares worth 41.755 billion naira in 46,994 deals were traded last week by investors on the floor of the exchange. The financial services industry led the activity chart with 2.399 billion shares valued at 26.054 billion naira in 22,833 deals, contributing 72.25% and 62.40% to the total equity turnover in volume and value. The conglomerates industry followed with 213.139 million shares worth 2.434 billion naira in 2,284 deals. The third place was the oil and gas industry with a turnover of 163.313 million shares worth 2.054 billion naira in 3,443 deals. Trading in the top 3 equities were Fidelity Bank PLC, FCMB Group PLC, and Sterling Financial Holdings Company PLC. A total of 391,760 units of exchange-traded products valued at 8.45 million naira were traded last week in 140 deals. For bonds, 74,677 units valued at 71.574 million naira were traded last week in 32 deals. On summary of price changes, 88 equities appreciated in price during the week, 17 equities depreciated in price, while 50 equities remained unchanged. Olayin Kaojo for Business Express.
And now let's head to capital markets, where the Asia markets are yet to pick up, start business in 2024 in a very positive way. And for global market update, Nika is standing by.
Hello and welcome to the global market segment. Global stocks edged into the red this Monday as investors prepared for U.S. inflation data and a corporate reporting season where strong results are needed to justify high validations. In Asia, stocks declined. The Hang Seng Index depreciated by 1.88%. The Shanghai Composite dipped 1.42%, while there were no markets in Japan due to a public holiday. European markets were lower, continuing the negative sentiment seen at the start of trading in 2024. The French CAC was down 0.16%, FTSE 0.39%, and the DAX is up 0.01%. Now, stock futures in the U.S. also edged lower as traders recalibrated their bets in the wake of last week's sell-off. The Dow Jones Industrial Average is down by 0.53%, S&P 500 depreciated by 0.27%, and the Nasdaq Composite is also down 0.29%. Now, African markets also started the week in negative territory. The JSE Africa Top 40 in South Africa dipped 1.36%. Tunisia's Stone Index dropped 0.53%. Namibia's overall index is down 0.08%, while Ghana's GSE Composite is marginally negative. And that's Global Market Review. It's back to Musa.
Thank you, Neka. Well, this is where we end this edition of Business Experts. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Experts returns Tuesday at 9:30 a.m. I am Musa Bakar. Enjoy the rest of your day.